Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And let me tell you, the Northeast Investors Trust has a story to tell, or rather, a lot of numbers to show. So, what did this investment trust get up to this past year? We're diving deep into their annual report to find out just that. Before we get into the nitty-gritty, if you enjoy getting straight answers from these financial documents, make sure you are subscribed. We've also got a fantastic community over on Discord with the link in the video description below. This filing is basically their official report card to shareholders. They are telling everyone how they did what they own and what they spent money on over the last year. It is for the period ending the 30th of September 2025. Let's talk about costs first because that directly affects your returns. For every $10,000 invested in Northeast Investors Trust, they paid out about $200. This is about 1.94% of that investment. That might not sound like a lot, but over time, these fees can really eat into your profits. It means that for every dollar you make, a decent chunk goes to the people managing the fund. Now, for the big question, how did they do? The Northeast Investors Trust had a total return of 11.13%. That is pretty good. They actually did better than their benchmark index, the ISBAM US High Yield Index, which returned 7.23%. So, on paper, they beat the market this year. What helped them out? Well, they mentioned that moving some of their bond investments into stocks was a good move. Also, some of their individual stock picks really did well, like Pyxis International and Homer City LLC. But it wasn't all smooth sailing. They had some weaker performers too, like NL Industries and American Gilsonite. One interesting point is how they handled a bad bond. The bonds from Altus France were exchanged for cash and other securities. And it sounds like they got almost their money back, which is a win in the bond world. Overall, they're saying that companies are having a pretty good time with their debts, not defaulting much. The impact of tariffs on their portfolio companies was pretty limited, though there was some nervousness in the market back in March and April of 2025 when those tariff details first came out. This chart really shows the long-term picture. If you had invested $10,000 back in 2015 in Northeast Investors Trust by the 30th of September 2025, that investment would be worth about $14,030. That's a gain of over 40% in 10 years. Pretty solid considering the ups and downs the market has seen. Now, if you had put that same $10,000 into the US High Yield Index, it would be worth about $18,043. So over that longer 10-year stretch, the index actually performed better. This highlights that while they beat the index this year, over a longer period, the index delivered superior returns. Looking at the average annual returns gives us another perspective. Over 1 year, the fund did great at 11.13% compared to the index's 7.23%. But over 5 years, their average annual return was 6.40%, while the index was 5.53%. Still good. However, looking at the 10-year average, the Northeast Investors Trust returned 3.45%. And the US High Yield Index returned a much stronger 6.07%. This reinforces that while they had a great year, their long-term performance history suggests the market index has been a better bet for sustained growth. Let's look at the size of this fund. As of the 30th of September 2025, they had about $131.6 million in net assets. That is a significant amount of money they are managing. They hold 49 different investments. The portfolio turnover rate was about 40.96%. This means they bought and sold about 41% of their holdings over the year. That is a moderate turnover. And for all this managing, they paid their trustees a hefty $641,536. That is a significant chunk of change for overseeing the fund. Now, what exactly are they investing in? The vast majority, nearly 80%, is in corporate bonds and notes. This basically means they are lending money to companies by buying their bonds. About 18% is in common stocks. These are actual ownership stakes in companies. They also have a small amount less than 1% in GDP-linked bonds. These are bonds whose payments are tied to the economic growth of a country. And a tiny portion, just 0.3%, is kept in cash equivalents, which are very safe and easy to access investments. Let's see who their biggest bets are on. Their top holding is Homer City Holdings with 8.4% of the net assets. Then comes Pyxis Holdco with 7.4%, Spirit Aerosystems at 4%, KB Home at 3.9%, and XPO Logistics also at 3.9%. Interesting mix of industries here, showing a diverse approach to their top 10. Looking at the industries they are invested in, Technology is their biggest bet at 12.2%. Electric utilities are next at 8.4%. Then we have aerospace and defense at 7.7%. Notice the diversification here. It is not all concentrated in one area. This is generally a good sign for managing risk. Let's dig into the actual day-to-day operations, the statement of operations. For the year ending the 30th of September 2025, they earned over $8.2 million in income. Most of that, about $7.9 million, came from interest on the bonds they hold. They also made a bit from dividends on stocks and other income. On the expense side, their biggest cost was administrative expenses and salaries, totaling nearly $1.1 million. That is understandable for a fund of this size. Trustee fees were another significant expense at $641,536, as we saw earlier. After all those expenses, the fund made a net investment income of over $5.7 million. That is the money left over from their investments before considering market gains or losses. They had a net realized loss on investment transactions of about $71,838. This just means that when they sold some investments, they sold them for a little less than they bought them for, on average. But here is where it gets interesting. The change in unrealized appreciation, meaning the increase in the value of investments they still hold, was a very positive $8 million. So even though they had a small loss when selling things, the value of what they still own went up a lot. Putting it all together, the net increase in the fund's net assets from operations was over $13.7 million. This shows the fund grew in value over the year due to its investments. Looking at the statement of assets and liabilities as of the 30th of September 2025, we see their investments are valued at nearly $130 million. They also have nearly $1.8 million in receivable for interest, meaning they are owed that money. On the liability side, they have accrued expenses of about $172,000 and payable for trustee fees of $164,000. And finally, the net asset value per share. This is the price of one share of the fund. It was $3.88. This is calculated by dividing the total net assets of the fund by the total number of shares outstanding. This means for every share, the underlying value of the investments is $3.88. This ratio, the ratio of operating expenses to average net assets, is 1.94%. This again tells us that for every dollar of assets they manage, they are spending about 1.94 cents on operating the fund during the year. This is pretty much in line with the first cost figure we looked at. The ratio of net investment income to average net assets is 4.46%. This shows how much actual income the fund generates relative to its size. After all expenses, it is a key measure of profitability for the fund itself. Now, these notes to financial statements are where the real details are hidden. The stuff that explains how they arrived at those numbers. For example, they explain their valuation of investments. Basically, they use market prices when they can. But for some less common investments, they have to use their best guess based on other information. They call these fair value investments. They are very transparent about their level 3 investments. These are the ones where they have to use their own judgment and assumptions because there isn't a ready market price. They dedicate a whole section to explaining these. As of the 30th of September 2025, they had about $13.7 million in these level 3 investments, which is about 10.35% of their total net assets. This is a good chunk, and it means there is some subjectivity in how they value these assets. They break down the techniques they use, like market approaches and comparable company analysis. It is quite detailed and shows they are trying to be as transparent as possible with these harder to value assets. In the notes to financial statements, there is something called a contingent liability of $161,005. This sounds a bit serious, right? It turns out there was a lawsuit filed by a former trustee, and the court ruled in favor of the former trustee. The trust has to potentially pay out some money related to indemnification obligations. This is a reminder that even investment funds can get caught up in legal disputes. And at the very end, a note about the Employee Retention Credit, or ERC. It seems like during the pandemic, the government offered credits to companies that kept their employees. The Northeast Investors Trust believes they are eligible for these credits. They recorded a credit of $169,960 for the year. This basically means they got a tax benefit that reduced their expenses or increased their income. It is good to see them taking advantage of government programs to help their bottom line. So, what is my take on Northeast Investors Trust after poring over this report? Well, they had a strong recent year, outperforming their benchmark index. They are diversified across different asset classes and industries, which is a plus for risk management. However, their long-term performance has been weaker than the overall market index, meaning that while this past year was good, historically investors might have done better just sticking with a broad market fund. The significant allocation to level 3 assets means there is a degree of subjectivity in their valuations, and potential investors should be aware of that. The lawsuit adds a small but notable contingent liability. Overall, it is a fund that can deliver good short-term results, but investors should weigh that against its longer-term performance and the management fees. Alright, that is our breakdown of Northeast Investors Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.